What's everybody? Here is Matt Faircloth here for Chats with Matt, and I'm super grateful to be here with you guys with our equity sales manager, my partner in crime, my good friend Vinny Celeste. Vinny, how are you today?
Good. Happy Friday. How you doing?
Friday to you, man. I love Friday, and I'm grateful to be doing this thing every Friday for Chats with Matt. Friday is the only day I'd like to be doing this. It's kind of like a great way to complete the week and talk some real estate shop with everybody. And that. So welcome. While we let some folks join us, I want to just tell everybody welcome. Happy Friday. If you guys want to share anything you're grateful for Friday, and that, share it in the chat box. Love to hear from you guys. And love you guys always joining us for our Chats with Matt show. So thank you. Vin, man, like, why don't you, I'll put you on the spot, right?
Yeah,
I forgot
okay.
to, since I got a co-host here. So sometimes it's just me, sometimes it's just you. Can you, I'll put you on the spot, share a win, anything that you had this week. What's a win that you had, business, personal, anything that you got this week that you'd like to share?
That is putting me on the spot, and I don't want to give
Go for it.
away some of the exciting things we'll talk about soon. So I'll go into a personal win.
Go for it.
I love rock climbing. I took a lead class, which means now I'm lead certified. Which, if you don't know, that's like when you take the rope up with you and you're clipping it along. So my mom's not happy, my grandma's not happy, but I'm happy, and I'm going to be climbing outside this weekend out in North Carolina. So it'll be good.
Okay. Does that mean like there's nobody belaying you, or
There's someone belaying. Yeah, I'm not there yet. I don't think I ever want to be there.
No,
but
you
yeah,
don't.
there's someone. They stand below you and they belay you. It's different than there's another version where there's a rope like above you and you're just always on the rope kind of. This one's
But
not.
this is where you're climbing and laying your own clips as you go.
Yeah.
Okay. It's lunatic level,
Yeah.
ludicrous speed. Congratulations on that. Win that I have is I did really good with my running goals this week. I knocked out 2.8 miles this morning, which for me is a lot. And I had a goal to run 365 miles this year. So an average of a mile a day. And of course, I don't run every day. So sometimes you got to do a few to catch up. So I'm currently, Vinny, 1.5 miles ahead of the calendar. Right. So meaning like I think there was 40 some days already that's happened in the month. I'm 1.5 miles ahead of where we're supposed to be right now on this calendar. So
that means you can have a drink. You can have a drink and not run this weekend if you want.
Yeah, I might. I just might. Yeah, I don't know. Maybe I'll just chill out. Right. Maybe I'll keep running. I don't know. Before we we got a super special guest we want to bring on for you guys. So stay tuned. We got a great guest for today's Chats with Matt and Vinny show. But I wanted to, before we get to that, Vin, we've got some great news to share, some really interesting stuff to talk to everybody about here. So why don't you take it away? I know you're the host on the show, so you'll actually have to screen share. But we got some cool stuff we want to tell you guys about. Vin, what do you got?
Sure. Yeah. Well, we've been really busy, and so maybe you guys been seeing some more of us recently. And the reason is we're hard at work trying to put more of us out there, right? Try to educate folks as much as we can. And so, if you haven't seen yet, we talked a little bit about this last week. Let me share my screen. We recently launched a whole education side of things here, and really, what's most exciting is what we recently launched as far as this week. That DeRosa Mastermind. So really exciting stuff. We are active, and trying to provide some individualized support there. So we're talking an hour and a half a week of, meetings with the DeRosa group. So really trying to provide some outreach and individualized support any way we can. So here's our education page. Lots of exciting things to talk about here. And if you want to hear it from Matt, when you go to the education page, there's a nice sizzle reel of Matt telling you all about it. But we have some events coming up. Yeah. And it's just some catchy music.
There's more of that right there.
Yeah. Catchy music and everything. But here's some, to highlight a few of the things we have going on. A multifamily retreat, which is going to be happening in April. So we're hard at work, making sure that's the most successful event we could have.
Is registration open for that? Are we taking commitments for the multifamily retreat?
We are, yeah, and so the ticket too. So, guys, this is to put it lightly. We want to keep it small, so attendance is limited. And last time we had 10 people. We're going to up it to 20, but still, very limited number of availability. And we want to, maintain that intimacy. That was some of the feedback we got last year. Really, was that's why we were able to provide so much value. And so,
That's good stuff. And the mastermind, it's a weekly call with myself, the DeRosa team, sometimes Vinny, sometimes Hervé, sometimes Justin Fraser, sometimes our underwriter, Haith Patel, or a number of those folks are all in those calls to just talk real estate shop, talk about real stuff you guys are dealing with. They talk through, and also we give an inside scoop to what's happening at DeRosa. We're in the middle of a refinance right now. And what's interesting about that refinance, and we went through this on the mastermind, is we're able to get a way lower interest rate than what you might expect on a multifamily refinance, because of the way that we worked it. So if you want to hear more about that, go to derosagroup.com/education, join our mastermind, and we'll give you guys the play-by-play on acquisitions we're doing, and on refinances we're doing, and on property management issues, and the good, the bad, the ugly. We let you guys know everything that's happening on the DeRosa side in that mastermind. And we give you guys a look inside our business, and we get a look inside your business to help you guys get where you want to go.
Yeah, we've been sharing deals, helping with underwriting, really jumping into the weeds.
We get a lot of deals. I think Hervé sent out like it was 3 or 4 deals that went out in the last couple of weeks that don't work for DeRosa's criteria. And it's not that they're not good enough for us. It's just sometimes they're not big enough for us, or they're not in the market that we play in. So we forwarded out 30 units, 40 units, 50 unit stuff to the mastermind students. And we've also sent out stuff that are just in playgrounds that we're not in. Like there was a deal that came up in Lynchburg. There's a deal that came up in Norfolk, like by Virginia Beach. Not, great market, stellar market, not our market. And that's okay, just because we don't fish in too many ponds. So if you guys are a mastermind student, we forward leads out.
You know, also I was thinking is kind of cool too, that we were saying, that the mastermind is something that we've been chatting about for a while, but essentially it's something that didn't exist, a month ago or so. And we've also been covering topics on scaling and building your CRM and how to get a team that's going to be able to do things like that. So we really open, I think, like you would say, open Komodo. I mean, we really spill the beans as much as we can. So
I kind of use the same phrases over and over again, don't I? But yeah, that's the way that we roll here at DeRosa. Transparency. Just launched the multifamily boot camp through Bigger Pockets last night. Had the first Q&A call in that. So anybody watching is a boot camper for this current round, and you're watching, leave a comment in the chat bar. Would love to give you a quick shout out and a hello for that boot camp. It's going really well. Had a great call last night. Vinny went a half an hour overtime because we had so many questions come in from folks in that. We've got 375 people signed up for it. Almost all of them were there. It was great. Great call. And that's a 10-week program. You guys can join the wait list for that. We're going to be doing another one I think in the fall in that, but the date, we'll get you guys the dates as soon as we have them. If you join the wait list right there at derosagroup.com/education.
Awesome. And how about in March? I know we have something exciting happening in March. I'm excited.
Yeah, man. I don't know if we have a, I'm in. Good start. Hey, Theo, good to have you, man. And Theo joining us from LinkedIn. Theodore, thank you for the shout out, man. I'm glad it went well for you. And stay tuned. We're just getting ramped up. I mean, that boot camp's going to be great. It's always been a great experience for us. Make sure you're on all the Q&A calls on Thursday nights, and we'll keep rocking it for you. But another great piece of news here. I don't know if we have registration link that Nabiku can share or that, but we are going to be speaking. Me, Justin, and Hervé are going to be speaking at the Best Ever conference out in Salt Lake City in a month, almost exactly a month from now. Actually, a month from today. Myself, my friend Andrew Cushman are going to be interviewing Joe Faircloth on stage, hearing his origin story. We're also going to be, Hervé, Justin, and I are going to be presenting on what it really takes to build a phenomenal, not a average, but a phenomenal multifamily team. We're going to be presenting on that on the stage at Best Ever. And if you guys joined Best Ever as a Best Ever Plus, buy a Best Ever Plus ticket, you guys can join the partner hunting program that we're going to be doing at Best Ever, where Vinny, you, me, and the DeRosa team are going to be facilitating a group of 200 people, which if you guys are watching, you can be one of those 200 people. And we're going to help you find people in that room that can help you get your business to the next level. So if you need an underwriter, if you need an acquisition specialist, if you need a asset manager for assets that you have already or that you want to buy, we're going to help you build your team and find those people, either as employees or new partners, whatever it is. We're going to facilitate a phenomenal partner, partnering it, partner networking kind of thing. So it's going to be great.
Yeah, that's awesome. And it should be.
With Reg Link or no?
We do, yeah. Nobiku, can you go on Instagram? There's that. It's the roast at 10% or something like that. It's a 10% off discount. It's from the post yesterday.
Yeah.
It's not a link, but it'll be a code that anyone can enter to get 10% off.
Yeah,
so.
if you could put that here and also put it as a separate post on Insiders, go to make sure people get access to that so that they can join us at Best Ever. And can't wait for you guys to be there. The tickets are selling out quickly. They got over, I don't know if you know, but they have like 550 or 600 tickets sold already for that event. It's gonna be great.
Wow, big party.
Yeah. It will be fun. A big party, big learning. Salt Lake City's a great town. So it should be a lot of fun and a great location. So,
yeah.
Cool. So that's that. Then I want to just preface our guest a bit. We at DeRosa is a multifamily operator, but we are an owner operator. We've also invested in a lot of other things. We've looked at other asset classes, but we also get that as operators, as investors, there is an asset class. There are plenty of asset classes that we don't get involved in, and so an investor with a diverse portfolio, you got to be involved in different things. You can't be all in one thing. And I've advised many folks that do actively invest with DeRosa, or those that are our students, that you can't have all your eggs in one basket. You cannot. You really need to be exposed to different things. And an asset class that really is different enough, and also in some ways a great complement to multifamily syndications, where you get lots of upside. In multifamily syndications, you also get get cash flow, you get all those things, but you've got a little less control because you're investing in something that needs to have someone else behind the driver's seat for you. That could be a 200-unit apartment building. Well, I get it. If you've got a day job or if you've got other things going on, you don't want to be running that 200-unit by yourself. But you also don't have as control, so you can't really sell your shares when you want. It's hard to really move the needle as much, and yet it's also harder to take advantage of leverage, meaning like put this much money down and controlling a larger piece, controlling a larger asset. So the asset class I'm referring to is turnkey rentals. And so we're super excited that DeRosa has a partnership forged with a company called Rent to Retirement, which, as I understand, is one of, if not I think they are the largest provider of turnkey rentals across the United States. And they're best in class. As I'd like to say, DeRosa is as well. They're best in class operator and provider of turnkey opportunities. So super stoked to be with you guys today with the founder and CEO of Rent to Retirement, Zach Lemaster. Guys, let's give a big thumbs up on your social channels and a welcome to Zach for joining us today.
Guys, thanks so much for bringing me in. Vinny, great job on the lead climbing. The next step is to have you out in Colorado where we can take you on some multi-pitches. And Matt, great job on the running. Great head start. We'll
Thanks,
check
brother.
We'll check in December to see if you've kept up with that or you're putting in 10-mile days.
You're more than welcome to hold me accountable. A friend of mine gave me a great analogy on running, and there's on anything for physical stuff. A pot of boiling water can't get any hotter, right? And so I'm not looking to run marathons. I'm looking to do the minimum effective dose to keep my body healthy, because my goal is not to run a marathon. My goal is to keep my body healthy so that I can live as long as my body wants to stick around for, right? So I want to live vibrant and live healthy. And so that means running between 2 and 4 miles at any given time. I don't want to be the guy that's running marathons or running ultras or whatever, because to me, running a marathon is an awesome way to get injured. Or training for that. So not looking to do it, just want to have plenty of longevity and be able to chase my kids around the house and have enough energy to go about and crush my day like I've been doing. So, but thank you for that. And I thank you for the kudos. You're more than welcome to text me and hold me accountable, or anybody else here watching to say, hey, Matt, how's your running going? Because running is an enormous part of my goals for the year.
Yeah, it's all consistency. I love it.
It is. Cool. And thank you to BQ for putting out the links for best ever. I see you put it out there, guys. Check that out. If you guys are watching right now, there's links for 10% off your best ever ticket. So you guys can check that out too. Just want to close that loop. So Zach, can you please just take a minute and tell us a bit about yourself, your company? Give us like a 30-second intro so that folks watching can understand you and get to know a bit about your background.
Yeah, I'd love to. And thank you everyone for participating today and giving me the time to speak to the community. I'm super excited about the partnership that we have. I'll try to make my story as simple as I can, but I have a background, actually nothing to do with real estate. I had a previous career path as an optometrist. Met my wife in optometry school. I was in the Air Force for 7 years as a captain. I practiced optometry there because I was on scholarship. That's where we started investing in real estate. Even the first house I bought on a VA loan, excellent loan, was a duplex, house hacked it, and loved the idea of someone else paying for my mortgage. From there, we continually bought more and more real estate. We just got the bug. And one thing and this is about 15 years ago, one thing I always tell people is that since that first duplex, we've bought more and more real estate every single year since then. And that's just a goal we've had. And that's even true up until last year. And we have big plans for this year. But ultimately, we were able to replace our active income through the portfolio that we built as optometrists to retire early from that career path and become full-time investors. There was a point where we really hit a catalyst of being able to exponentially increase our passive income. And this was being strategic to invest in different locations throughout the US, not just in our own backyard, because that's where we felt comfortable. And that was a lot of work. We had to build teams and systems, identify the best markets and locations and best practices to run an efficient portfolio. But by doing so, it really allowed us to expand our investment income and reach the goals that we wanted to. And so when that happened, we had a lot of people that were reaching out to us, friends and family and colleagues, and they were saying, hey, I really see the success that you've had, and I want to invest as well in some of these locations, or my local market's too expensive to own real estate. But we don't have the knowledge, we don't have the time. Like, can you help us? And can we invest with you? And so that's really where the turnkey space started for us, is just helping people do what we do, and following the same process that we did. So fast forward to today, I mean, that was the birthplace of rent to retirement, where we assist people in building turnkey portfolios in some of the best markets throughout the US. So that's the short and skinny on it. Here we are.
Awesome. Yeah. Zach, can you tell us a little bit, like, what is a turnkey rental, if you had to define it just for the layman out there?
Yeah, turnkey is one of these buzzwords as well that we hear thrown out. And so I always want to define what we mean when we say turnkey. And so turnkey to us at Rent to Retirement means a property that's located in a market that we've identified to be a healthy and productive market for sustainability long term. We want to be invested in areas that have landlord-friendly legislation, low taxes, population, economic growth, make sure that the rent numbers make sense for cash flow long term, areas that have a diversity of industries. But anyways, when we talk about turnkey, this is a property that's newly built or fully renovated, leased, and professionally managed by one of our local teams in this area, where an investor can come in and own that property without having to create their own team from the ground up. And the idea is for someone to easily scale or diversify or get started investing in real estate, actually owning physical real estate, kind of following this process and tapping into these systems. We operate with single family. We do have some multifamily and new construction and development.
Awesome.
Mm-hmm. That's great. And it's interesting because it's, like I said, it's diversified enough that it's not apartment buildings. It's still housing though. And I think that, from a recession standpoint, we need more housing in America, and housing's kind of like the last domino to fall. If there are people that aren't able to pay, or companies start folding up or whatever, that may affect retail, may affect even places like self-storage, which I'm not the biggest fan of myself, but I'm always a fan of residential housing, whether that's in an apartment building or in a single family home. So those that are considering investing, like, what is the typical profile for someone who invests in a turnkey with your company that maybe has multiple of them or that kind of thing? What is the typical investor's, what's their typical backstory?
And we get a whole diversity because I think turnkey can be a great avenue, Matt, to fulfill, that area of your investing. Most people are investing, as you mentioned earlier, having a diversified portfolio. Most people are investing in multiple asset classes, and we encourage the same thing. Just like we invest in syndications and we're partnering on some stuff that, I mean, it's important to own multiple asset classes and in my opinion, multiple locations as well. It's just, how do you create that without, pulling your hair out and having this scattered portfolio? But generally speaking, I think the people that benefit from turnkey and that we work with are either people that want to get started owning their first property. They've never bought a property and they just want some hand holding, or they want to be completely passive, right? I mean, these are, and we use that term loosely, completely. I mean, you still need to manage your manager, but these are people that, they have their W-2 profession. They make good income. They like the benefits of owning rental real estate, but really that stops there. But we also have people that are very active investors too, that flip houses or real estate professionals that use turnkey as a great way to tap into a new market where they see opportunity, but they don't have the time to build their own team from the ground up. So people that want to scale quicker or diversify into some of these other markets, that's kind of the general gamut of people we assist.
Yeah. And I mean, and to piggyback onto that, I mean, one thing we offer with syndications, which I know is available in turnkeys as well, is if somebody's a active real estate investor, like a flipper or a wholesaler or whatever it is. Unfortunately, I mean, flipping's great. I've flipped my share of houses and I've done a few wholesale deals. And those are phenomenal, but they are very, very heavily taxed because it's all capital gains, right? And so a great way to shelter some of those capital gains is to invest in a long-term rental like a turnkey. Because turnkeys, can provide, depreciation losses. You can still participate in cost segregation studies and those kinds of things to show the IRS a legal negative loss. This property lost money, and that loss can wash out some of my gains elsewhere. Which is why I think turnkeys are a phenomenal tax vehicle too.
100%. I mean, that's exactly what we do. What all of us do, right? Is you have your active income, and if you're an RE pro or just looking for additional tax benefits, put it into a property that's already stabilized and can provide that for you. That doesn't take up a ton of your time. I mean, that's same thing with us. Even though we're heavily in the turnkey space, I mean, we buy just a lot of stabilized assets as well, simply for the tax purpose. So it's a great complement.
How long have you guys been at this now? How many investors are you working with?
Yeah, we did. So last year we did just over 1,000 doors. About half of that was new construction. That's across 11 different markets. So we work mainly in the Midwest and Southeast, fitting that criteria that we talked about from the cash flow legislation, tax structure, in areas where we want to be in the path of progress. We have, I don't know exactly how many active investors, probably 3,000 or 4,000 at this point. Most people are looking to build a portfolio of rental properties, in addition to other things that they're doing. And so our goal is to work with someone long-term to assist them to meet whatever goals they have. And we've been investing in the turnkey space. It was probably about 10 years now since we were, I mean, as I mentioned, some of it was just friends and family in the very beginning, and that's about 10 years ago.
Wow. Cool. Yeah, 10 years and starting with friends and family. That's awesome. So do you know how many
get started? That's how I got started syndicating. I'm sure that's how you got started in, almost anybody that's raising capital for others to put into their business in some form or fashion or another ends up starting with friends and family. And then you scale, well beyond that, hopefully.
100%. Yeah. And I think that, just one thing that we always get talked about or when we talk about raising capital and things like this is like, how do you attract people? And this is kind of off topic, but just talking about what you're doing, right? If people see that you're successful and what you're doing, they want to learn more about that. So, that's just kind of naturally how our business developed.
Yeah. Now, so Rent to Retirement as a company? You're, as I understand, your companies, you're working with best in class operators that are in markets that you vetted. I'll give an example because we're looking at opportunities with you here now. Ocala, Florida, right? That's a booming market. That's a burb of Orlando, in that, and we don't like to invest in in the largest city. We like to invest in the cities that are getting the spillover and population growth that are still affordable and people can still rent, median income and whatnot. So Ocala is a perfect example of that. But your company has vetted markets, vetted operators that you're working with, right? So like what I like about Rent to Retirement, maybe you can comment on how the structure works, is that when I am working with you, I'm not just working just with the rental retirement staff. I'm working with operators that are boots on the ground in markets across the United States.
Yeah, you have to have your local team, right? It all boils down to having people that are there, hands-on, that are going to make sure the investment is going to be successful or have the highest probability of being successful. And again, Matt, this is just following the same process that we've done over time, building our own team in these areas. And so the first thing we do is identify a market. And once we identify a market, and this is on a macro and microeconomic scale, so areas that we want to invest, but also like specifically where, we have people attending city planning meetings every month to say, okay, where's the transportation, the job growth? Those are areas we want to be in the path of progress. And then we establish teams there, teams that are either rehabbers or builders, and property managers. Obviously, that's a huge key point. We personally invest with these teams and vet them and make sure we have a very strict standard that they need to follow to be part of our network. We accept less than 3% of people that, providers and partners that want to be a part of our network. And we also have some internal stuff. We also are building some of and rehabbing some of our own internal stuff, but it's just following that same process to make sure when an investor comes through our network, they have the confidence that, hey, this has there's a track record established here, but they have a high propensity for success. But really, the goal with our company, Rent to Retirement, is to assist people in building a comprehensive approach. I'm sure you could agree completely that when you're investing in real estate to any capacity, you're operating a business, even if you have one rental, and you need to really approach it that way. There's all these ancillary things that come alongside with building a really successful, sustainable business. From the tax, the legal, you need to have the right CPA, attorney, insurance provider, lender. And so we take this comprehensive approach with the network that we've built that has allowed us to be successful, and we share that with our community to whatever capacity that they need. I mean, I approach real estate as it's a lifelong journey. And you really need to make sure that you're working with the right people and building that team. As you mentioned earlier about the conference, Go Abundance, about building that foolproof team, because that's how you build a sustainable model long-term. And that's how we approach it.
So with that business in place, the active investor that has the turnkey rental, what's their engagement like now that they have the property management on team, site on staff, and they have people helping them fill vacancies and that sort of stuff? What type of engagement do they need to maintain to manage a property?
Yeah, I think that the most involvement, at least what we encourage, is in the very beginning. I mean, it's important to understand what you're investing in, understand the market, understand why, what is your criteria and why are you investing in this location, and make sure that's congruent with your goals. So going through the due diligence and the financing process and the property selection, I mean, we're intricately involved with our investors to do that. The idea is once they own the property and it's stabilized with the local team, though, it should be fairly hands-off. You have an identified or a specific point of contact on property management that is providing the monthly reports to you and keeping you up to speed. I always tell people that you should be educated on how your properties be performing, and you can check in with your manager as much as you need to. But the idea is that it's self-sustainable, right? So you're not taking off a ton of your time with managing these properties. It is important to be conscious and aware of like how the management is performing. That's a huge thing in any investment that you have. But really the idea is meant to be where you buy it, it's stabilized, and then you can continue to focus on growing your business over time. So it's very minimal. I would say maybe a couple hours, 2 to 4 hours a month, really just reviewing reports, making sure you understand how the tenant is, how the property management is operating, and then focusing on really your business from there.
And the owners obtaining financing through your that's something you guys are helping them figure out, right? Like the financing options, like they don't have to buy these properties free and clear. They're able to obtain what I've seen to be fairly favorable financing on the properties. Yeah,
and it's up to the investor. It really again depends what their goals are. So the first thing we want to do with anyone that's interested to learn more about these markets or turnkey investing in general is we have a consultation with them. We want to learn about what their goals and criteria, what their financing and financial position is, because we have a lot of people that are investing through a self-directed IRA and they need non-recourse lending if they're using a retirement vehicle, or if they can't qualify for conventional lending and they need non-QM money or something like that. Private money is available as well. So it's really up to the investor and what their goals are. But we have a huge network of lenders that can offer all types of financing depending on their goals.
So there's probably it sounds like there's some upfront work, but then the management thereafter is somewhat, put in place and hands off. Can you describe, what does someone when they make a decision to get into turnkeys, is there anything that they should have in place, coming to you guys? Are there any expectations they should go in with?
I probably not actually, Vinny, just because there's a whole gamut of different people. And I think it just really depends, like, how do you see this type of investment fitting into your overall goals in your portfolio? If this is a scenario where you do want to tap into new markets, then that could be an easy way for you to do that, or just learn about new markets. If you're a newer investor and just need a lot of handholding throughout the entire process, we spend a significant amount of time with people just mapping out their goals and making sure that there's an opportunity. One, I guess, I'll mention this, like one argument against going turnkey is there's no potential value add, right? Like you're buying a property at market value, and that would probably be true in most cases. And I would even stretch that to say, especially over the past few years, that usually, if you're buying a property even off the MLS, or really, you're really probably not going to get a huge discount on that unless it's a really dilapidated or underperforming asset. But you're really looking at this long-term, right? This is a long-term play where you have a stabilized asset. You take the tax advantages, you look at rental increase over time, you run the cash flow numbers to make sure they make sense for you. And you're looking at this as a way to really grow your wealth long-term. But that being said, we do have some creative opportunities, especially right now in the new construction space where, and this is where I'm personally the most active, in markets where you can come into a new construction opportunity where there is immediate equity and things like this, where you can potentially do a cash out refi sooner, or even sell that property in the future for a gain and 1031 it. And so there's a lot of unique opportunities like that are available just based on where the market is. And so, like, one of our most active markets is, as Matt mentioned earlier, is Florida. We work throughout the entire state of Florida, and there's a lot of opportunity right now.
Yeah. Well, let's go there for a second. Tell us, for those listening, what are the markets that you guys really like in the U.S.? Because I know you're not investing everywhere, right? There's markets you like and markets you don't, right? So tell us some of the markets that you guys are really, really excited about and why. Like, tell me what, and then give me like a few reasons as to why these markets are great.
Sure. Yeah. So we've invested in the Midwest for a long time. This is really your bread and butter, just, B class, $150,000 to $200,000 house. That's just going to be predictable cash flow, very recession-proof type of asset. Maybe you get a 10 to 15% cash on cash return, depending on your financing you're using. So that's kind of your bread and butter. But really where we're most active right now is probably in the Southeast. So this would be areas like Texas, Alabama, Florida, some of these areas where there's a huge population shift. And this is where it gets exciting to me, because you can come into a property with potentially immediate equity. You have positive cash flow, but really you're looking at the long term, right? This is something where there's a huge shortage of housing, and it's not getting any better. And so This is where we see appreciation and rents going up time and time again. Specifically in Florida, we're very active in Southwest Florida, so like Northport, Port Charlotte, Cape Coral, more like Central Florida surrounding Orlando. You mentioned Ocala. Also in Polk County, like Haines and Point Siena. We look a lot right now at secondary markets outside of metropolitan areas. So as they become more expensive, like areas like Orlando, there's a lot of secondary markets like Point Siena and Polk County where it's still 45 minutes to an hour commutable, but man, the price point is just, a fraction of what it would be in Orlando and less tax. So there's a lot of opportunity in those secondary markets. We also like the Panhandle, so Pensacola area, a lot of military bases up there, and stabilized rentals. So that's kind of where we're focusing right now in the general areas that we like.
Well, I want to take Zach off the hot seat for a second and put Matt back on the hot seat.
Oh no.
Yeah, you know what? Because you touched into this a little bit when we introduced Zach, but I'm hoping you can elaborate. Just touch on how does the partnership with Rent to Retirement tie into our mission of transforming lives to real estate, and specifically passive investments?
Yeah, well, because we believe if I founded a company, dedicated to transform lives to real estate, and I said the only way you can do that is through our multifamily syndications. That's all. That's the only way that you can transform lives to real estate. Then I would be full of it, right? I mean, at the end of the day, I believe that diversity is the way to achieve financial freedom. And not a little bit of it in everything, but strategic diversity and in a few different asset classes. A lot in real estate, because I'm a big real estate believer, but maybe not all in multifamily. And I like, as I said, residential housing overall. I'm also a fan of a few other asset classes, but not everything. And I don't think you should just throw your money into whatever real estate you can get and cross your fingers. I believe that residential housing, as we look at what's happened to interest rates, Vinny, I mean, interest rates have gone way up. And so a home buyer may not be able to afford a home for the foreseeable future. A qualified home buyer may be having to wait. And this rising rate environment has probably pushed back the dream of home ownership for a lot of people. And so if you've got a young family that's got, maybe young kids, whatever it is, and maybe a family that's large enough that they really don't want to go live in a 2-bedroom in one of our apartment buildings, and that's okay. Maybe they need to and can't afford to live in a home, but they can't afford to, don't want to buy. Maybe they're a little more nimble, moving around, that kind of thing. And that's where an organization like Rent to Retirement comes in, where they can provide a great housing solution for that family. And so I believe Turnkey serves the needs of a lot of America's housing needs. And we're going to have more and more of those needs come up as rates stay up, because they're not coming back down anytime soon. So as rates stay up and the ability of America to afford a house pushes out a bit longer. So they're going to need to rent. And so we need good quality housing solutions for people. And that's why we like Rent to Retirement, because they're providing good quality housing solutions through A-class operators in markets that are growing. So it's providing a good return for our investors, which we believe they should get, whether it's in our products or not. And it's also providing a service that's needed for folks. And I don't see that service ever going away, really. I mean, unless we all start, living out in the woods, we're going to need a roof over our head for as far as I can remember. And so that needs to be provided by organizations like the Roaster Group and Rent to Retirement. How's that, Vinny?
Love it. And Zach, I appreciate what you were saying before too about finding out what the investors' goals and aspirations are, because that's a lot of what I do, are talking with active investors, people who are trying to get in. And I have been recommending Rent to Retirement. Nobiku, can you put in the comments where folks can find out more about Rent to Retirement? And I'll start sharing my screen too to show the little bit there. But Nobiku, please put that in the comments where people can learn more.
And while you're working on sharing your screen, for those that are looking to work with Rent to Retirement, Zach, or at least hear more about what you guys have to offer, what are some things that they need to have lined up, right? I get that your financial coaches that are going to be talking to them and, vetting the opportunity with them and whatnot are going to talk them through it. But what's important for them to have, perhaps lined up for the first call?
I would come prepared with just an idea of generally what your 1, 5, 10-year plan is. And I know that can be very fluid and dynamic. But I mean, just come to the table with what you're looking to achieve. And sometimes that's an open discussion. As far as financially speaking, I mean, you are physically owning real estate in this type of scenario. You are the only owner on real estate. And of course, that in our opinion, that is one of the benefits, right? You get all of the benefits of ownership, all the responsibilities too, ultimately, but all the benefits of property ownership. And so that means that you need to qualify for financing. You need to have capital to purchase it. I would say our typical price points would be between that $200,000 to $400,000 range, market dependent. And so you likely need capital to invest. I would say the minimum amount would probably be around $30,000, give or take, if you're going to be purchasing a house with 20% down, or whatever the case is. You can spend some time on our website and look at different markets and criteria. You can come prepared with a list of questions. But generally speaking, I mean, that's about it. Usually this is not a like, hey, pick out a property and buy it, right? This is a long-term. We want to build long-term relationships with people. We want to learn about your goals and make sure we're spending the time to go through and match you with that appropriately.
Vin, I forgot something, and this is important for me to note. So again, transferring lives to real estate. I believe that passive real estate investments outside of Wall Street should be available to all people. And I'll take that. I'll be saying that, for the foreseeable future, right? Unfortunately, because of what DeRosa Group offers, because it's regulated by the SEC, and because it is aggregating pools of investors into large apartment complexes and that kind of thing, there are many, many rules around who can invest and what we can do to communicate with those investors to make them aware of that offering. That said, and that what I'm really saying without saying it is that for a lot of stuff that we do at DeRosa, you got to be accredited, and that's not my rule. That's the SEC's rule. I hate that rule. I wish that everybody could do what we do. But what's great about rent to retirement is that if you are not accredited yet, you can invest through rent to retirement, and be accredited or not, doesn't matter, right? Because it's not a syndication. It's not a security. You're buying a home. That's what you're buying. You are buying a house, and rent to retirement is helping you do it. And so you're not buying a share of equity in a large apartment complex that DeRosa can offer you. You're buying a home, and you can sell it when you want, refinance it when you want, communicate direct with the property manager and what your needs are. So you've got a lot of control, and you've also, it's actually a great training ground to learn more about real estate investing. So for those of you guys that are want to learn a bit about real estate investing, it's a great hands-on approach to do deals, maybe in markets that you don't live near, and you want to work with an A+ operator that already operates quite a bit in that market.
Matt, I love that. And if we could go a little bit granular on maybe a few different ways where, the syndication and the physical property ownership overlap, and strategic ways to use this to really grow your portfolio over time. Because I think that's one thing that's allowed us to be real successful in our investing career is to, stay hyper-focused at one time on something. Sometimes in real estate we get these shiny object syndromes, but it is, we're all guilty of it. But yeah. I think once you invest in an asset and you feel comfortable, and then you learn about other asset classes and other locations and things like this, that really can open up your eyes and broaden your horizons to other things that will allow you to ultimately be a more savvy and successful investor long term. And that's one thing I really enjoy working with investors on. Even though they're not physically managing the property and things like this, they're still learning the process of like, oh, what is this investment market like? How is this different from this location? What things do I need to be aware of? What opportunity is there? And there's a lot of hands-on learning experience that I love seeing that. I love hearing stories of people that, they'll invest with us and then they'll do their own things, invest with us. And then 10 years later, it's like, hey, we kind of combined all of this to make this, just super successful portfolio. And here's our journey. And that just makes it super rewarding for me coming back. But what I wanted to talk about is hear your opinion about some things, especially over these past few years on some new construction or whatever. We have people that are coming into these huge equity positions, or they've had crazy appreciation, and they're looking at rolling out either a 1031 into something else, right? This could be another asset class. They can 1031 properties into a syndication, and potentially vice versa, right? Can you talk a little bit about how that potentially would work?
You can 1031 into a syndication, and it's got a funny name. It's called a tick, right? Like you think like getting a tick on your dog or whatever, but no, it's like a tenant in common, right? And so it can be done. It is extremely complex. The paperwork is like as tall as I am when it comes to doing a tenant in common. So if DeRosa is buying a 200 unit apartment complex in Winston-Salem, North Carolina, you can sell your 10 unit and take the proceeds from that sale and roll it into DeRosa's project. It is complex. It can be done, and you are all along for the ride with DeRosa through that process. Now, an alternative is to talk to rent to retirement, because you can take the proceeds. Let's say you sell a 10 unit apartment building for just round numbers, $1 million, and that's, it's 100 grand a door. You sell it and you've got a net gain of say 400,000 that you need to put somewhere. You got to pay tax on it. You got to put it into a real asset. Now that's a real viable scenario that could have happened for someone that's owned a 10 unit over the last 4 years. They likely saw those kinds of gains. Might be skittish on selling, especially in today's market, because to be honest, Zach, as you know, might be hard to find to roll that up into a 20 unit, because multifamily's been a little squirrely right now with regards to pricing. So a better thing to do, a better thing to look at, I'm talking to those or students of ours or those that maybe have, small to mid-size assets. You can call up rent to retirement and say, okay, I'm going to put this million in cost basis to work, and buy, what would it look like, Zach? Let's say, 3 to 4 single family homes. They could be scattered site. They could be 2 in Kansas City, 2 in Ocala, or 2 in Kansas City, 2 in Denver, wherever you decide to do it. You can spread them around a little bit, and put some of that equity, sprinkle it around a little bit, so you're diversely exposed into multiple markets, and you remain in control. We're a great operator. It's okay to let us stay in control, but if you want to buy these properties and own them and cash flow them and decide if you want to sell them, sell them off later or whatever, it's the ball's in your court. I mean, that's what I love about turnkey as an option for 1031s.
Yeah, we see that a lot, especially over the past 1 to 2 years. We have these kind of 3 different scenarios where, one, someone has just ridden this appreciation wave, whether it's on a primary residence they're selling or an investment property that they owned, especially if it's in a really expensive market. But it may not be positive cash flow, or minimal cash flow, and so they could 1031, their $1 million 3.2 in California or something like that, and turn it into a whole portfolio that's producing double-digit cash-on-cash returns in some better markets. Or they have a scenario that they're an active investor, and we talked about this briefly earlier, but cost segregation, we're at 80% this year, which is still extremely attractive, and then next year goes down to 60%. And so this is a way for a lot of people to easily access, properties that don't take up a ton of their time, but will serve that tax need. We have some really high-level investors that are doing just crazy, awesome things out there, but they just need a place to park their capital to be able to fulfill that tax need. And we also have people that are going through 1031s right now, and most people don't know this, but over 50% of 1031s fail. And the reason that they fail is that they cannot find, there's strict timelines with that, right? Yeah. And so you need to meet, and it's that you have to buy the same amount that you sell. Otherwise, it can be very, very difficult, because how the taxes work is if you don't buy 100%, you're taxed not an equal amount if you buy less than that amount. But people have a hard time finding the amount of properties or the right type of properties to fulfill their 1031. And the last thing you want to do is be in this scrambling match where you're trying to fit properties just to complete the 1031, and then you end up with a portfolio that's not going to be successful, especially if you're buying multiple properties from multiple different sellers. It only takes one seller to potentially screw up your whole 1031. So we have a ton of people going through 1031s or cost segs to fulfill that need as well.
Yeah, no, I mean, it could definitely be a great option. Vin, I wanted to, as we're winding down here, I wanted to throw one more question out here, Zach. So I think we've spoken a lot to the potential passive investor that looking for capital to place. A lot of folks that pay attention to the DeRosa Group, are operators like we are in that. So I wanted to put out some thoughts from you, Zach, on how, let's say someone is, they've got a portfolio of properties in Albuquerque, New Mexico, and they want to approach rent to retirement and listen, I'm an A-class operator. I think Albuquerque is amazing. What should they scale up to? What makes an A-class operator A-class in your eyes? Aside, assuming they're in a market you like, what are some things that you think that you need to see from the operators that you guys work with?
That's an interesting turn here, Matt. I'm glad you bring that up, because so what you're saying is there's someone that has a portfolio that may be interested to bring their portfolio to our network of investors
and their management, and they want to be on your team, right?
Yeah.
Like they want to help rent to retirement expand and offer up the market that they have their team already on the play, on the ground. And I mean, I was a Trenton landlord that had like 115 units at one point. And there was a point in my career where that we would consider becoming a Trenton turnkey operation. We pivoted and got into multifamily. But then that was years ago, but that is something that I could see people being curious about, that are more operators and investors that are considering scaling in that. But I think being a turnkey developer, provider, and manager is a good business venture for folks. And if you get taken under the wing by a great organization like Rent to Retirement that's helping you grow and scale, maybe that's a great opportunity. So what would you want to see, from someone like what is, and it's also from someone who's looking to invest with you, to hear what your criteria are for operators that you guys even consider looking at?
Yeah, that's a great question. I love that. So typically in our vetting process, one, you have to be in a market that we see potential in, right? And then I think I already went through some of those things. But if you are interested to explore this further, I mean, reach out, let's have a conversation. The first thing I always do is, let's fly down, meet in person, and let me personally invest with you, right? Let me join your organization on a personal level with some investment properties and partner with you on some stuff to see how the operations turn out internally. Because as much, and I've just learned this over the years, that while everything can look really good on paper, you don't really truly know until you're partnered with someone and you have some like firsthand experience.
It's great to know.
And that goes with everything, management, that goes with just the rehab quality or the building quality. So that is an expectation. And other than that, I mean, we're going to go through a strict vetting process. We need to look at you don't have to do management in-house, but we do need a very thorough property management team in place. And we need them to adopt a lot of standards. What is their tenant vetting process? Do they take 3 times monthly rent? Are they qualifying? Are they calling references, not just their current landlord, but previous landlords that may not want to, that the first landlord could just say whatever to get rid of them? What is their income like? So the vetting on the management side, on the rehab or the building side, like what is the quality? What type of property? What neighborhood classes are you in? I could go on and on. This could be an hour discussion, but it's really a pretty strict vetting process. Not to say that it's unrealistic, but I'd be happy to speak to anyone that's interested in this. And it's probably about a 2 or 3 month process where we just have to have some firsthand knowledge of how the operations. But hey, if you're in a great market and there's potential for upside there, then let's have a conversation. Let's talk about it. And there may be some way to collaborate. Yeah.
It's understandable. I want to underscore one thing that I want to make sure everybody heard you say is that you as an organization and even you personally are the first investor. And I think that's good to know that when folks work with Rent to Retirement, you're working, you got your money where your mouth is, air quote, right? So if you're presenting Ocala, Florida to investors, it's because you've already vetted it. You've already put your money into Ocala, Florida. Like you say, listen, my money's ahead of yours. I believe in this market because I've already put my money here with that operator in properties that they're either developing or rehabbing. And so you're ahead of those investors and you've already tested it. You can even show your properties as track records and success stories. And that's really, that's a big integrity check that I really like to, that's really great to highlight and make sure people heard you say.
Yeah, thank you for that, Matt. In addition to that, there's a lot of different ways we can partner with local teams too. For example, once we do have a track record established and we see productivity and those standards being met, a lot of times we'll come in and be a private lender and we'll fund some of those deals, right? Or we'll do the ground up construction with them. And so that the sky's the limit once we have a good foundation established. And then there's a lot of different ways that we can partner on those levels. It's
great. Well, I think this has been a great conversation. Vinny, final thoughts?
No, I so appreciate that. And also, I appreciate that how forthcoming you guys are and how easy it is to get in front of you all too. So if you guys go to the link that Nobiku put out there, it's very easy to have a real time conversation with someone from Rent to Retirement. You'll find out if it's a good fit. And by the way, one of the things that we didn't touch on that I think is so cool is there's an Excel spreadsheet that goes line by line. It will show Rent to Retirement's open investments. And that's what we were talking about with 1031 exchanges and how there's a timeline and there's high risk of just losing the benefit of the 1031. Well, Rent to Retirement keeps an ongoing Excel list of all their active investments. You can see a picture of the property. They help underwrite the deal. You can see projected returns. You'll have an address. So, it's very black and white. You can really get to the bottom line, and getting in front of someone at Rent to Retirement will definitely help, understanding those benefits and if it's a good fit. So
that's awesome. Well, Zach, thank you. You guys, DeRosaGroup.com/RTR. If you guys want to hear more about Rent to Retirement, and that'll take you guys through the partnership portal we have with Rent to Retirement. DeRosa Group does not partner with organizations very regularly. And so I want you guys to take it to heart. The fact that DeRosa has been willing to take on this relationship and partnership means that it's something that we hold near and dear and we vetted in that. So if you guys are considering diversifying a little bit, I understand this is something that we've thought long and hard about as a company, and we're excited to offer this up to you guys. So check out DeRosaGroup.com/RTR to hear more. Zach, people want to hear from you personally or want to connect with you. How would they do that?
I would encourage them still to just go through that link. Of course, they can check out the website, but that's got links to all social media. We try to put out a lot of content as far as education, really about all things real estate, right? Not just turnkey. We have our hands in a lot of different stuff, and we just love what you guys are doing over at DeRosa, Matt. I mean, there's a lot of same thing for us, right? We're not just doing this just because. I mean, our synergies and our integrity and philosophies align. You and I have been on stage together, and we're part of also other communities as well, and just sharing that, I think, with good operators in the space. I mean, in aligning in those goals is super important, and just providing excellent investment opportunities and helping people transform their lives through real estate. I love that.
Sweet. Thank you. Well, Zach's been phenomenal having you here today. And we'll probably have you back on a chats with Matt and Vinny very, very soon to catch up and talk more about markets, maybe even bring one of your market operators on to hear more specifically about why you love Kansas City or Ocala, Florida, or some of the other great places you guys are working with, because I think that'd be a great benefit to our community here to talk about the markets that you guys have already vetted, and for us to learn about, well, why is that place? Why is Kansas City amazing as a place to invest?
Well, it's because they're going to win the Super Bowl, Matt. That's why.
Yeah, my son, believe it or not, I'm just north of Philadelphia. And my son had my wife order him a Kansas City jersey because my son knows that daddy does not like the Eagles, only because it's very hard. Once you've gotten to know Eagles fans, it's very hard to like the Eagles. And that because their fans are just 10 out of 10 boisterous and loud and obnoxious and everything like that. So
I had to go there. Yeah.
In that side, I'll be rooting just between you and me. I live just outside of Philly, but I'll be rooting for Kansas City on Sunday too. So I hope they pull it out.
Right on. Thanks, guys.
Cool. Good stuff. See you soon.
See ya.